Hello everyone and welcome to our webinar. For us it's here for the afternoon. It's here in the afternoon in the UK, but it may not be where you are, but wherever you are in the world, welcome. And what am I trying to say here, David? Is the recording going? I've completely lost the thread. Oh yeah, I do apologise, honestly. Yes, I got completely thrown myself there. I just wanted to make sure the recording is underway, so that as I said, the webinar will be recorded and will be up on YouTube later on today, either at my YouTube channel, which is Anna Cooling, or the Quantum Trading YouTube channel. So apologies, but before we start, may I just draw your attention to the disclaimer that I know you can see on the screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And here am I with my husband David, and we'll be looking at the charts and the markets through the prism of volume price analysis together with our quantum trading tools. Volume price analysis. I know some of you who come regularly would have heard me say this, but I have to say it just for the benefit of new people. And I like to say it at the beginning rather at the end, because by that time, you know, some people have gone and they don't get, you know, they don't get the, you know, what we want to convey to them. And that is a volume price analysis, a methodology that David and I have been using for, well, ever since we first started in these markets. Back in the day when there was no internet, it was a telephone, down to our broker, who then called the floor of the exchange. And we actually started trading FTSE futures at 10, God help us, at £10 a point, which was a lot of money in those days. So you can imagine how hair-raising it was. However, the methodology itself is much older than that, and what we've done is we've taken it and we've kind of not refined it, we've added elements to it, but at its heart it's the relationship between the price action that you see on the chart and the volume being the activity, and it's understand how this relationship works, because if you do, the one thing that volume price analysis will do for you, which is over and above every other methodology, is that it will give you an idea of where the chart is likely to be going next. In other words, what volume does, it authenticates the price action on the chart. Is it an authentic move, or is it an anomaly? You know, is it a trick, as it were? And given these markets are all so terribly manipulated, you know, if you just use price action and you don't have, you know, the volume to give you this this indication, I really do think you're making trading even more difficult than it is. What we've done as well, we've added elements from Richard Wyckoff. We also use candlesticks as opposed to bars, price bars. There are, you know, there's other people out there who also incorporate volume into their trading, but they, you know, not quite in the same way. And with the methodology, the other thing about it is once you've got the basics, once you have got a grip on analyzing the chart with price action, with volume, you can then use that as the basis for adding standard indicators. I use standard indicators on time, or proprietary indicators, and this is where our quantum trading tools come in. But at the heart, it's the chart with you know, with the volume and the price action. And, you know, the best way to show it is actually on the charts in, you know, what's happening today, because and from that we can say what is likely to be happening next. And what we've done on Amazon, that's the original book that started the first book that I published, basically, where the methodology is explained. What we've done with that now is we have combined it with a book of examples. This is the book of examples for primarily stocks, indices, and commodities. There's also a version for forex as well, but you know, this is the little box set that comes with the original and the two. As I said, there's over 200 worked examples, and it's across all time frames. It's from fast time frames right up to the monthly chart, because the beauty of the methodology is it's applicable not only across markets but across time frames. And the indicators that we'll be looking at today, slightly different from what we normally do, because normally we just focus on the ones that we developed for day trading, and you can use them for stocks as well, Tick and Renko, and primarily based on NinjaTrader. But I am going to have a look at the forex ones as well, because this is the last time this session is going to be in this format. We're sort of changing it slightly, and also we'll also change it because we've got TradeStation coming on board. So in this session, David will have his NinjaTrader charts up as usual. He'll have tick charts, Renko, and he'll be looking at, I think you've got the indices and some commodities today, David. Yeah. But I've got something I want to show you on MT5, which was something we looked at in the first webinar we did back when the London, just before the London Open, and it was on the pound yen. But the principles that I want to show on this particular chart and using the forex specific indicators, the principle of the move that I picked up on the pound yen is actually applicable basically to whatever you trade. The indicators, as I said, are from the NinjaTrader ones. We call them the essentials package. It's the indicators minus the forex specific one. The whole package comes to £749. You can buy the package, you can buy one, you can buy a bundle. All the details on the indicators that we're using today for Ninja, the MT45, and also the Trading View ones, you can find at quantumtrading.com. And it's really, I'm not going to go through them individually now because we really want to get to the chart, but that's the website where all the information is there. But if you want more information, or we have bundles and you want a specific combination, you can always give drop me an email, anna@annacooling.com, or david@helpdesk.com. Whatever you buy from us, whether it's one, a bundle, or the full package, all covered by a 7-day money-back guarantee. What's also included is any upgrades to the indicators. That's included for free. Platform upgrades, what you pay for the indicator, you never have to pay us any more money. And if you start with one and you then want to upgrade to a bundle or the package, or you want to switch packages, you only ever pay us any difference that may be applicable. So we try and make it as easy and as cost effective as possible for traders. And for myself, if you want to catch up on my thoughts and views on what is happening in the market and how to apply volume price analysis to different charts, it's annacooling.com. That's my site, and you'll find a blog going through predominantly on stock analysis and some commodities, and then the forex and the quantum is all handled by various Facebook pages. I'm just going to stop there, pass over to David, and then we'll get going.
Apologies, I was just hopping around all over the place. Good to have you with us. I'm not going to hang about. If you have any questions, just drop them in the chat box and we'll answer them there. Longer questions we'll answer on air. I've got the indices up. They're absolutely flying up, really recovered virtually all the move lower yesterday, which we all suspected was a little bit overdone, a bit overblown. So if you're on the indices, they are literally motoring right now. No doubt come to a pause point pretty soon, but certainly rising pretty dramatically. I'm going to pass back to Anna and we will get going.
Okay, two major events that we've had in the finance markets. Obviously, we had the FOMC yesterday. It was all, as you know, if you were following the markets, it was all over the place. I mean, a 25 basis point cut in interest rates. What happened? No one told the US dollar. It absolutely, shot up. The euro sort of collapsed. Why? Well, it wasn't. They're saying it's not enough, and then there was a bit of misunderstanding as to what Powell was saying. Was it an insurance cut, a one and done? No, it's not one and done. We're all going to be monitoring the situation. Donald isn't happy, is he? He's never happy with the Fed. Everybody's, trashing their currency, and what does the dollar do? It goes up. Here in the UK, I have to say, as I said this morning, our currency is collapsing more by accident than design, in the sense that the Brexit has caused us all sorts of problems. But at the moment, it's pretty much a race to the bottom for currencies. Everybody wants a weak currency. Europeans want a weak currency because of exports and etc. etc. The other risk event of this morning was actually the Bank of England here, and again, interest rates are on hold, but Carney's usual doom and gloom. Oh well, interest rates could go up, and etc. etc. This is the background we all have to deal with, as traders. It is what you see on the chart. It's the fundamental news, it's the political news, it's the geopolitical events, etc., etc. And of course, the week doesn't stop today. Tomorrow we have NFP and a really good number for non-farm payroll number. I suspect the dollar may continue to climb higher, but we shall see. What I wanted to say very quickly, for those of you who weren't with us this morning, this is the 30-minute chart of the pound yen, and you can see here we have what we call the volume point of control. This is volume, price, and time. This looks at volume over an extended period of time. It's very closely allied to the principles of market profile, where you have an area of the chart which is, if you like, the value area. It's an area, it's a congestion area, it's range bound, it's sideways markets, and it's a phase of price action where the market has really kind of decided that it's not going to go anywhere for whatever reason. In forex, we find these phases of price action happening particularly ahead of important releases. The market just quietens down, moves sideways. It's not going to go anywhere. A lot of traders, not a lot, but traders can sometimes look at congestion periods, and they can be extremely frustrating because you get a lot of fake outs, and you say, well, how do you know it's going to be a fake out? It's a genuine breakout. Well, the first thing is you have to identify the most significant congestion phase on the chart, which is the one that is the fulcrum, the balance of the chart. This is what the volume point of control does. And then the other aspects of VPA come into it, and that is what you want to see is when you do get a break from the volume point of control, you then want to see it on rising volume. Now, what happened here, this was the pound yen this morning, and I'm just going to talk about the indicator that we use. This is a specific indicator for forex, and this is the currency strength indicator, and this was the hourly one and the 30-minute. And what is significant about this indicator is it picks up the extensions, the overboughts and the oversolds and the potential reversals. But what is also very good at it does two things. First of all, it tells you when to stay out of a particular trade, a particular pair, particularly when the lines are moving together. If we look here, this is the New Zealand dollar and the Aussie dollar. So the Aussie, New Zealand, you think, no, there's probably not a lot going on at the moment, because it is still moving sideways. It's when you get this cross in the center here, and this was the yen, this is the magenta line, and the yellow one is the British pound. You get a cross on, this is the hour, and it was actually also reflected on the 30-minute. And what that is highlighting is until that cross, they weren't really going anywhere, but once you get a cross, what it is highlighting, as the 30-minute chart was itself, potentially the start of a move. For myself, because the 30-minute chart in particular is a kind of benchmark chart for me, and then I have the 3-minute chart, what it's telling me is, first of all, it's in congestion. I have a cross and I see the congestion on the 30-minute, but I see it start to pull away. It tells me that there could be a potential trade on a faster chart. And then this is actually what happened. This is on the, I've kept it on the 15-minute. So you had the cross across the time frames, and then you had the divergence. A trend is a divergence. It's an asymmetrical move. When a chart is in a congestion, you have a degree of symmetry. It goes up, it goes down, and you have and in the forex market, you have a return to the mean. This is the mean line at the moment, which is the volume point of control. Now, what also happened on this 30 minutes, as I said, this volatility here is the Bank of England. This is the rate decision, and then Carney coming in saying, you know, yeah, it's whatever he said. It caused the pair to move lower, as it were. But as I said, it's using the congestion phases in one time frame to then potentially give you a trade. When you start to get this move away, the move is then going to be picked up, obviously, in the faster time frame. Of course, it can simply carry on moving sideways. Now, what's happened actually? I think my VPOC's moved, David, hasn't it? This has moved downwards because this is where it was this morning up here. Yeah, I confused myself for a minute. This is this moves in real time. This is the move that was here from this morning. Right, that's what I'm going to say on that. You will see exactly the same type of price action on the Ninja Trader. As I said, I just wanted to use the pound yen because it was such a good example this morning. I think the 3-minute chart has long moved. Let's have a look. Let's take this off. One of the advantages of MT5, if you have access to the platform, is it is a multi-asset platform. It's you know, you've got the opportunity to trade not just forex. So if I just show you here on Market Watch, it's got these are the obviously the pairs, and then you have indices, you've got gold, silver, you've actually got stocks as well. So if your broker can offer an MT5 platform, you will find it will also open other markets to you as well. And in fact, the 3-minute chart is a really nice example because this is 5:15, this is 13:15, this is 1:15. The timestamp on my MT5, whatever you see here, is actually 2 hours earlier. So what we have here, we have a congestion that we see here as reflected in our trend monitor. As you can see, the price wasn't really going anywhere. Quite a lot of volume going in under these candles, but you know, compressed price action, not going anywhere, not even sufficient to move it in one direction or the other. Horribly choppy price action, waiting for, as I said, the BOE, and then we get the pull away on the 3-minute chart, and we have the trend monitor kicking in bright red. We have the trend dots moving up. This is actually 200 MA, a fractal 200 MA, as I said, that I use. But with our indicators, with VPA, you can add proprietary indicators to it, standing indicator. I don't use Fibonacci, but I know there are traders who like to use Fibonacci. Fine, you know, whatever it is. VPA is fantastic. It actually makes those other indicators work much better. I know we have a lot of emails. People, is it Elliott wave, David? Which is can be a particularly tricky way of interpreting the chart. Because you never know whether that wave is you know, it's going to be another fake out, as it were. Well, with volume, that will actually give you that additional confidence, as it were. And to move back to the VPOC, the other element of the volume point of control, as you can see here, this is the most dense volume over time. The yellow line. You have this move lower. What then happens is we then have what are called low and high volume nodes. This is a high volume node because you have a density of volume. The great thing about this indicator is it acts as it's another version of support and resistance, but with volume. And then what happens is when you have a low volume node here, as you can see here, because you've got volatility, what that means is when price approaches one of these areas on the volume, on the VPOC, we are going to be pretty sure that it is going to crash through there at speed. And I can't think of another indicator that can highlight when that is likely to happen. I mean, you know, this is a time-based chart, so obviously each candle is going to take 3 minutes to open and close, but it's the speed that those candles will go through through this low volume node, what you can be certain of is that it's not going to be held up. It's going to open, close, and move on. Open, close, and move on. Whereas here, where you have volume over time, as you can see here, it's just going nowhere. Is that anything you want to say to that, David, or is that fine? High volume, right? Let's move over to David and have a look at. She said the indices are actually moving for once, aren't they? Brilliant. Okay.
Just going to switch screens. There we go. Should be able to see my screen coming up any second now. Yeah, I can see it on Anna's screen. That's great. Just move the chat box out of the way. As I mentioned when we first came on air, the indices have been absolutely flying, really rising very strongly. It's just one of those days when you've got to get in and make money. It's what we call a money day, and it's certainly that today. What are the reasons for it? Well, on this chart, I've got the NQ running on this particular chart array. I've got the 15-second up here. I've got the 3-minute, the 5-minute along the top line, down onto the 10-minute, 15-minute, and over onto the daily. What was interesting about the daily, it was obviously all bound into the FOMC and what went on last night, our time at any rate. But when you actually look at the volume associated with the daily candle, which is here, and you just cross-reference it with other candles, similar volume, and you just take a judgment call on what your feeling is about whether this is this an overdone move, in other words. Was it an opportunity for the market makers to get in, the big operators to get in, make a load of money, frighten the market, and promptly reverse it, which is exactly what's happened. It's happened time and time and time again on the British pound, where news comes in, the market reacts violently, completely overdone, the volume doesn't align, and it promptly reverses a few hours later or a few days later, whatever the time frame. You see it all the time, excuse the pun, but you do. And this is what it's about. It's trying to analyze from the daily right the way down to your intraday charts as to what exactly is going on in terms of volume and what it's telling you. I mean, this is the 15-second to go to the other end of the spectrum. You've got a move lower here. You've got the volume falling away and the down candles. Here it is. We've got very light volume here under this down candle. So the market's going to rally a little bit off there. That's what you're reading the whole time. You're trying to interpret from whether it's a 1-minute chart or a daily chart or a weekly chart, whatever it is, you are trying to interpret and then apply the tools and indicators which give you the help that you need in order to stay in these trades. Because staying in is the hardest thing to do. The reason I've got this running, because I normally do anyway, but I've just got it up there for just to really highlight how fast you can read a chart using VPA, and the fact that it's not just about slow time frames. You can do it on ultra fast time frames as a scalping trader. Let me just head over to the where I've got the 3 indices together, the YM, the NQ, and the ES. There we go. Top line is on 5 minutes, so they're all pretty much following one another around at the moment, which is good. Down on the bottom line, I've got the dailies, and again, what was also another signal in terms of whether we were going to see a reversal was the fact we had the volatility indicator triggered. It was triggered here. The daily trigger is unusual. It doesn't happen a great deal, but it does happen, and when it happens, you have to pay attention. We had a couple over here. I can't remember what the news was surrounding that, but clearly volatility. We then had another one here. What's looking as though the market is going to break to the downside and then promptly reverses inside the spread of the candle and back up again. And we've got a similar sort of thing going on here. We've got the volatility triggered on the day. In other words, the price action moved outside the average true range on the day, and now we've got a retracement back inside the spread of the candle, which is what we're looking for the whole time. It doesn't always happen. There is no always in trading, but on balance, that is generally what you expect to see. And if it does happen, then you're not frightened out of positions. If you're not in a position, then it's a question of waiting and being patient for that particular phase of price action to clear from that area and move on to the next level. Just keeping an eye on what's going on here. What we've got right now is got a bit of a pause point coming up. Why? That was fine. Nice widespread up candle, decent volume under that. That looking good. Then we get an anomaly. We get the price is trying to rally. We've got a wick to the upper body. We've got a pivot gone in above it. good volume underneath. So there's a fair amount of selling in there. Is that selling sufficient to reverse it? Probably not. It's just a pause point in the longer trend higher, or the intraday trend higher rather. But as soon as you see something like that, your expectation at the very least should be that this market is getting a little bit overextended, is getting maybe a little bit toppy, a bit tired. The expectation is that you'll maybe move into a congestion phase and ultimately into a full-blown reversal if it develops in that way. And the way we use volume price analysis is to help to identify whether a pause point in a trend is actually a reversal, a true reversal, in other words, from a primary trend higher to a primary trend lower, or vice versa, or whether it is a pause point, and VPA reveals that for you, because if you're in an uptrend and you see price action falling away and you've got falling volume with it, then clearly that the pressure there is diminishing, and in exactly the same way in the downtrend as well. So it's applying VPA not just to get in, not just to stay in, but also in analysis of these pause points, which are the ones which are most damaging, because if you're in a strong position and the market starts to pull back or reverse against you, then you've got you get frightened out of a good position, and invariably what happens is the market then continues on. Excuse me a moment. Apologies for those who come along regularly. You know, we have a couple of small dogs who like to join in from time to time, so apologies. We haven't got a bit of work done outside, so something going on. Apologies. I'll just close the door. Bear with me. Sorry about that. A bit calmer now. Here we go. So let's go back. This is on the three of them. So we've got the YM at the bottom left, we've got the NQ in the middle, and we've got the ES over on the right-hand side. And the reason I always have all of them up, even though I'm only trading one, generally speaking, is purely because you will see different patterns of price behavior with associated volume. Not hugely different. There are days when you see one market is down and another is up. It doesn't happen that often, but it does happen. But more importantly, you get to compare the price and volume relationships across the three markets, which should, generally speaking, move in lockstep, and therefore just get a different perspective. It's a little bit like trading euro-dollar. If you're trading euro-dollar, then look at the dollar-Swiss, because you tend to get the inverse price action and volume relationship. It just gives you that different perspective. Just go back onto the multi-time frame chart, that one, there we go. And we're still carrying on higher. No reason to pause just yet. This is the one I think we were looking at originally. There we go. The reason the volume is not building under here is purely because I have it turned off. You can, on NinjaTrader, you can have it as on the close of the candle, or you can have it intra on the candle. In other words, as every tick comes in. I have them closed off because I've got so much data coming in. That's the only reason. So that'll fill on the close. That's the only reason it's not displaying there. Just go down onto the 15-second, which is always a nice chart to teach on and also to trade on. A little bit of weakness came in on that candle. You can see the volume there, uplift in volume. And then we get the market continuing, but look at the volume. It's falling away a little bit. And then we get another little signal of weakness here. We've got this a smaller version of this one, but again, decent volume under there. So once more, your expectation is that at that point, the market is going to roll over a little bit. It's looking a little bit weak. Bear in mind, this is a 15-second chart. So, you know, this is quick. But if you're a scalper and you're looking to take points, this is how fast you have to read this. And this could be, it could be anything. It could be a spot forex chart, a commodities chart, a stock, anything you care to name. And it works in exactly the same way. And in many ways, what appears at the top of the screen is almost irrelevant. You have to know what you're trading, of course, but from a technical perspective and a VPA perspective, it really makes no difference, because the methodology is universal to any chart. So if you've got a chart with time and volume on it, you can make money. Just looking at this little rundown here, what did we see? It's what I mentioned earlier on. You've got two down candles and you've got volume falling away. What is that telling you? It's telling you that the selling pressure is not following through. In other words, for a market to fall, you want to see rising volume, because it takes effort to fall as it does to rise in exactly the same way. And what you've got there is you've got a falling price and you've got falling volume. So clearly the selling pressure that was there is not so strong. It's falling away. It's a little bit weak. And we get another a step up in the price action. And if you have NinjaTrader, or if you have something that's got these sorts of fast charts on, generally speaking, 1 minute on a free chart is probably about the quickest you'll be able to get. But it's a great way of learning VPA. You can see the trend monitors helping to keep us in through there. It hasn't changed. We're in bright blue at the moment. And that's what it's all about. It's helping to keep you in. You can see on the 3 minute, no flicker here. We went through this phase of price action where the market went into a little congestion phase. Did the trend monitor change? No, not a jot. It's just kept you in, gives you that confidence to stay in. Nice widespread up candle, no wicks, tiny wick to the bottom, nothing at the top. Nice good volume. You know, that's nice and solid, moving up to the next level. Up onto 5, there we go. Similar sort of picture. Looking nice and solid there, nice and steady, nothing to rock the boat. And as you can see, the trend monitor is bright blue across the time frames from the 15 through the 3, 5 minute, down onto the 10 minute, and over onto what seems very slow, the 15 minute time horizon. Oh, right, okay. Sorry, I apologize. I do have my chat box closed off when I'm in full flow. Apologies for that. Anna said there was a question about the colors on the trend monitor. What does the purple, oh right, okay, what does the purple ribbon mean? I'll answer that for you, Nez. I've also got Alex's question you've got up there. In fact, I'll come back to that in a moment if I may. The purple here behind is the histogram from the volume point of control. Let me go to this second chart, it's probably easier to show you. There we go. The yellow line is the volume point of control itself. That is the fulcrum of the market. That is the heaviest concentration of volume. This volume builds constantly. The volume point of control moves about. But the volume histogram down here is basically showing you the depth and concentration of volume at the various price points. And the way it's used, and it's exactly the same way as price-based support and resistance, because as you get to these regions, if you get to what we consider here to be a low volume node, the market is like to move through there fairly quickly. So if this is in a downtrend, it's going to move through here. There's not a great deal of volume there to support it. In other words, it's going to move through there pretty rapidly. If it gets down to the volume point of control itself, where you've got a ton of volume sitting, then expect the market to congest, because the volume alone will cause it to do that. And in addition to that, on the accumulation distribution indicator, which is where these lines have come from, this is price-based support and resistance. So volume looks at it through the prism of volume, price, and time, which is why we get this histogram with this volume displayed in this way, where price has been sat for a long time. So in other words, the longer the time price sits in a region, then the deeper will be that concentration of volume. Whereas with price-based support and resistance, which is on the accumulation distribution indicator here, these levels are purely based on price. The thicker the line, the more dense is that particular area of support and resistance, and therefore more likely to be of importance. These thinner lines up here you can see are less significant than these thicker ones down here. And when they come in clusters, here for example, we've got the volume point of control and we've got a region above and a region below. Once we get back down into this region, you know, the market is going to congest pretty strongly around here, and may well be here for some time. As a trader, that's what you want to know, because you want to know what is going to happen next. Not what happened last week, last month, or an hour ago. You want to know what's going on at the live edge. And as far as I know, this is the only way to do it. So we're carrying on up. I mean, this is a huge points haul. We've been sat in here. When did we join? 15, somewhere in here. We're now looking at 40 points on the NQ, which is a massive move. And you know, you sit through that. If you've got decent contract size on that, you're making some serious money. And I have to say, it's not stressful, because this is not a volatile trend. This is not a sluggish trend that's crawling up. This is a market that's roaring up, and you just have to climb on board. The decision you have to make is, and this is where a lot of traders get unstuck, they're frightened to get in early, and therefore they try. See how fast this is moving now, right? I'm expecting the volatility to trigger, which is exactly what's happened. That sets the alarm bells ringing for me, because that's moved very rapidly. Volatility is triggered, I'm now waiting to see what's going to happen next on this particular candle. I've got an eye going over here. I'm expecting some retracement because when you get speed and when you get volatility, you can pretty much guarantee that you've got the big operators playing. Look at the spike in volume that came in there. Just pop that up full size so you can see it. There we go. Massive spike in volume. What does that tell you? It tells you, first of all, that the big operators are playing in there. And secondly, when you get a dramatic move like this, the volatility is triggered, and you know for a fact there's going to be some sort of reversal in play because it's a trap move. It's a simple way for them to make money. I can't stress it too strongly. Now what you're seeing is the reaction. You're seeing the pullback, the reversal. It's what you expect to see. If you're in that, it's time to get out, close out, or partially close at any rate. Take most of your money. If you're trading multiple contracts, take most of them off the table. Leave a couple to run if you wish, or just close the whole lot out, get out, sit tight, and wait for the market to clear. If the market clears up to this region, somewhere above 79.90 and beyond, you can always step back in again. It's no big deal. What have you lost? Nothing. You've lost maybe a few points in here, maybe, I don't know, 5, 10 points or whatever. Doesn't matter. It really depends. You have a decision to make. Do you want to sit through this congestion or not? And bear in mind, this is 15 seconds, so we're not talking a long period here. We're talking, you know, a handful of candles. But if this were a 5-minute chart or a 15-minute chart, that's an eternity, I can assure you. It's not as painless as this one looks as though it's going to be. But that's the concept. And what's interesting here is also, you see it here. You haven't got it over here, which is fine. Nothing on the 3-minute chart, which is fine. Little bit of a wick to the upper body, but you haven't got any volatility. So the volatility is restricted to this area, which in a way is quite comforting. What you see here is what you expect to see. So if you're trading over here on the slightly slower time frames of 3 and 5, that's fine. The danger comes if this is then replicated over here, and you're trading on these charts. At that point, you would most certainly close out and take your money off the table. But this also tells you why this has paused and lost some of its momentum. I mean, it's no great surprise. Let's be honest. This is on the daily, and you know, this is a big move by any stretch of the imagination. We're also coming up to, I wouldn't say that's significant, but we've got some minor resistance here, which is coming into play. You can see it actually capped off this little rally some time ago. When was that? 2-3 weeks ago, whenever it was. So we've got a little bit of resistance coming into play as we get up towards the 8,000 level. And bear in mind that whenever you get to these big numbers, there is almost always going to be some sort of pause, congestion, flip-flop around at that level, purely because it's a very big, significant number. Anything like that, 7,500, even the hundreds, certainly the quarters, the 250s and the 500s, and obviously the 4 figures as well. Okay, this is what we're seeing. It's what you expect to see, congestion. It's painful. The people who jumped in here on the trade to the upside, they will have probably jumped in late on it because this was a quick move, very rapid, and they're now regretting that decision because they're being squeezed emotionally, and now they're not sure this market's going to carry on higher. It's a very simple mechanism. Just be aware of it and use the volatility indicator. It's incredibly powerful and will keep you out of trouble. Okay, looks like we're going on to the next level up. Okay, if you've closed out, then you've got to wait. Okay, you've got more volatility coming in now. It was moving pretty rapidly. Let's see what happens on this one. See if we get any volatility in other time frames. Doesn't look as though we are. I've got to wait for them to... No, not particularly. We've got it on 15. Okay, that's all right. Trend monitor remains steadfastly blue, which is nice, all the way down the charts. Minor weakness coming in there, nothing too much to worry about probably. Carrying on higher. Really nice move. Nice and solid. Nothing to scare the horses. On up towards 8,000. Just see if it's being replicated on the others. I'm sure it is. Just quickly nipping on the tick charts. Put the YM on here. This is the Dow future. Okay, that's all going along nicely, and I think I've got the renko as well. Let's have a quick look at the renko. Can't remember what I've got. I've got the NQ on the renko. This is on the renko. Tick charts on renko, again, non-time based. It smooths out the little pullbacks and reversals. It helps to keep you in. You can use them to get in, or you can use them to help you stay in. I've got the trend monitor on here, works in exactly the same way. Yeah, the trend monitor down at the bottom here. You can apply it, and basically it works on a very simple traffic light system, if you will, where it goes from a bright color to a bright color. So it goes from bright red to bright blue, and you have the transitional colors of darker red and darker blue as it moves through those phases. It doesn't always follow that it goes from bright red to dark blue and out the other side into bright blue. That's the norm, if you will. Occasionally it skips one of those. It'll go from bright red through to maybe dark red and then out the other side into bright blue. It depends on the strength of the trend that's developing. But it's there for one reason, to help to keep you in when you get these pause points here. These are the trend dots. The trend dots work very, very close to the price action. They're absolutely brilliant with the renko. They sit below, providing support to the upside move. They also go into the transitional colors. You can see here we have some transitional gray here. We have this little reversal here in red, back into gray, and then we come out the other side into blue. And the trend monitor looks at trend in a more considered way. It takes a slightly longer term perspective. So the first one to change will be the trend dots. The second one to change will always be the trend monitor. So the trend monitor is really there to try to help to keep you in, whereas the trend dots are just giving you that heads up to mine a weakness in the trend developing at the live edge of the price action. Just go back onto the time-based charts again. There we go. There we go. Get that out of the way. Sorry about that. Okay, and again, we've got the volatility triggered here on 15 second. Seeing a little bit of congestion build. We've got some potential price support here. This red dashed line, that's quite a decent level that could come into play as price-based support if we carry on oscillating around this region. You can see the trend line here on the trend monitor, which is the second component of the indicator. It's actually two indicators in one. It's starting to fall away. It's moving down to this black line, which is the midpoint, the fulcrum of the trend, if you will. Similar in a way, I suppose, to the VPOC, where it sits at the fulcrum of the market. So you can see it's just started to touch that line and dive a little bit below. And you've got some transitional changes coming in color there as well. So what we're waiting for now is for this to break through 96 or 97 and then step up to the next level of price action, if that is what it's going to do. Just have a look at the 3 minute, no change on the trend monitor on 3. We're coming up to, we've got low volume nodes here above. There's very lightweight volume here. So we're looking for this market to move through there fairly rapidly. Up onto 5. More defined volume up here. And of course, what you'll be looking for now is you'll be going up to slower time frames. I'm not going to do it now, but you will be going up to 15, maybe up to 20 minutes, something like that, because you want to see what's ahead in terms of volume on the VPOC, on the volume point of control. You know, what have I got ahead of me? If I'm going to jump into this market now, I appreciate there's been a big move. Is it going to continue? If I'm going to jump in, I want to see what's ahead of me in terms of resistance, in terms of barriers to a move higher that may cause the market to pause outside of any fundamental or political intervention. Just one thing that comes to mind, which has been quite interesting, certainly a facet of price behavior over the last few days. And today, it's very strongly self-evident in that the yen is being bought very strongly. And this is totally contra to what is going on in terms of indices. Now, it may be changing. The last time I looked, haven't looked recently, certainly within the last sort of 15, 20 minutes, there's been a huge amount of yen buying this morning. So you have to understand that these relationships that exist in all markets, and the relationship between gold and the dollar is also another, which has fallen out a little bit. We've seen gold going up with the dollar, which is unusual. Normally, that's a sign of market fear. But certainly this morning, through the latter part of the morning, there's been some very strong yen buying, across the yen complex. And normally what we'd expect to see with this market roaring like this, you'd expect to see the yen selling off very heavily. Is it actually selling off now? Because it was very overbought. Okay, so the pound yen's reversing, and that's why you're starting to see that reversal, because that shift in sentiment in the market is now starting to be reflected in the yen. It's not a correlation that works. You know, it's not. There is no perfect correlation in this industry, but it's always been pretty good at defining sentiment in the market. But I have to say, they come and go. They do break down from time to time, and it's certainly broken down this morning. And over the last few weeks, we've seen a little bit of a breakdown in that correlation as well. But if I was seeing this going on now, I'd be paying attention to what's going on in the yens, and with the expectation that this is going to drag stop the yen buying and reverse into yen selling, because this is strong. And it really goes to the heart of trading these markets, understanding the relational aspects, because they're all interrelated. All these four capital markets are interrelated. It's just about money and sentiment and chasing risk. So I haven't gone away. Oh, sorry. Yes, there were some questions. Apologies. Sorry, I get fixated on the charts. Apologies. So, any plans for Think or Swim? Interesting, actually. We do get quite a lot of emails about Think or Swim, Ness. We're currently working on TradeStation. Multi-charts is the next one, but we will take a serious look at Think or Swim as the one after that. So, yeah, it's certainly. I wouldn't say it's on the drawing board, but it's certainly in our thoughts to take a look at that as the next possible one. I'm just keeping an eye on 8,000. That's been taken out with ease, which is nice. Alex, volatility right. Let me just scroll up because I've lost part of the question. When trading the 15-minute time frame and I can see a volatility candle on 5 or 3, is that relevant to say the volatility on the 10-minute assume price is volatile? All right. Hopefully I've answered that. In terms of there's another volatility just coming on 15 second. Whatever time frame you're trading, you may well see volatility on a faster time frame as we have it literally now. The relevance to your time frame will depend on A, how far away it is, and B, whether it subsequently appears there. This is an extreme example where we're on 15-second and we're up to 3-minute and 5-minute, because clearly, you know, it's not appearing on the 3-minute, but it is on the 15-second. The advantage of having that information is that at least it tells you that you've got volatility in a faster time frame, and therefore on your slightly slower time frame that you're trading, that is part of the reason that you will be seeing a pause point or a reversal point. If you get the volatility on your key trading chart, if you're trading, I don't know, a 5, 10, 15 combination, let's say, for example, and it appears on 2 of those 3, it appears on the 5 and the 10, and you're trading the 10, then that is a huge warning signal to pay attention. If you're in profit, close out. You don't want to be sat through the congestion phase. I would say 99 times out of 100, if I'm in a strong position and I've got a volatility candle up it, that's it, I'm out. It's as simple as that. I don't even think about it. I don't even wait until the candle's finished building most of the time. I just get out, that's it, done, and wait for the follow through to complete. If it's a congestion, if it's a full-blown reversal, fine, I'm quite happy. But if it carries on, clears that region, you just jump back in, because the cost of trading now is minimal. It really is. So I hope that answers that one for you. Just pay attention to them. If they appear on your trading time frame, that is absolutely key. If they appear on faster ones like we have here, but we haven't got it on 3, what we're seeing develop now here on the 3-minute chart, we understand why it's happening, because we're seeing it here and we have this volatility. So we're expecting it at the very least a reversal. So we're not surprised to see this occurring over on the 3-minute time frame. I hope that answers that one for you. I don't think there are any more questions there. No. Okey-doke. There we go. Just go down onto the daily and see where we are. Seem to be trying to break through that level I highlighted there, which we're just sort of attempting to breach right now. Almost back where we started yesterday, or pretty much we are back where we started yesterday. If this closes, if this candle closes off in the same shape as this candle, in other words, we get two candles, one up, one down, then that is going to replicate a 2-bar reversal. In other words, if you overlay one on the other, then you will have a shooting star candle. In other words, an effort to rise and the market's fallen back. There we go. That's exactly what we've got. So if you looked at that on a 6-minute chart, that would be an up thrust. And with decent volume under that, you're expecting some weakness to develop thereafter. Not immediately, but certainly a first sign of some weakness coming into this particular market. And let's face it, it's no great surprise, given it's absolutely roared up. You are constantly looking for, if you're a reversal trader, you want to trade the reversal, you'll be looking at this now thinking, okay, I'm going to trade off the reversal. I'm going to go short and make some money to the downside off that 2-bar reversal. Other traders on slower time frames will be sitting there thinking, well, actually, it's just part and parcel. I'm long this market anyway, so I don't really care. I'm in a much slower time frame. And here it is up on 5. It's not quite 6-minute, but it's pretty much the same. The 6-minute wouldn't have any body to it. But this is essentially what you're looking at. Good volume under that candle. So, expect some weakness. No great surprise. This business is about what volume price analysis does for you. It takes away that emotional response to what is happening next because you expect it to happen next, because you're reading the market at the live edge. It really is that straightforward. I don't understand why every trader on the planet doesn't use this, but some people don't believe in it. That's fair enough. It's the only way that we know of in 20 years of trading to actually read the market at the live edge, which is why we do it in these rooms and others, and we've done it for years. So we're quite comfortable doing it. And what you're seeing now is what you expect to see. You're seeing the market sell off a little bit. Then what you're looking for, if you're going to hold this position much longer, is what you want to see is what's going to happen over the next 2 or 3 bars, and particularly what's going to happen in terms of the volume. Because if you get this market falling under falling volume, then it's just a minor pullback, a minor reversal in the longer term uptrend. If the selling pressure starts to increase, in other words, you're seeing the market fall away and you're seeing rising volume, then that is a sign that the market has topped out and the sellers are taking control, and you're going to see selling pressure increasing. And it is then a full-blown reversal from a primary uptrend to a primary downtrend, and not a secondary reversal within the primary trend. And if you're a scalping trader, there's plenty of money to be made in there. Absolutely no problem at all. You can see here the Trminis has transitioned to red. We've gone through the classical transitional change here. We've gone from bright blue into darker blue, out the other side into darker red, and come out the other end into bright red. And a nice little run down. Bag some points, that's it. Trend line is flatlining a little bit, so maybe bottoming out now, starting to come back up the other side. We've also got the volume point of control sitting here. We've got a ton of volume here, so we need to see decent volume coming in under here if we're going to break through that region. We've got some price resistance overhead, this line here that's hopping about. So we've got some pretty solid price resistance there, and some half well developed support under here. This line here is reasonable. It's not that strong, not as strong as this one, but strong enough anyway to give a little platform of support here for this level. And another level down at 86 odd. Selling under there is not particularly strong. 2 down candles, volume's pretty low, so no great strength in that move. It's not that they're anomalous, it's just that the spreads are pretty narrow and the volume's pretty low. So it's just telling you that there's no great selling pressure right now. Let's just go back up to this one, see what happened in the next chart, next bar rather. There we go. Interesting. Okay, we had the same volumes under here, but the price action didn't go anywhere. So if you compare like with like, then from a volume perspective and a price perspective, this one relates to that. Therefore, why does this one not relate to the same shape of candle? In other words, why didn't we have a widespread candle down here somewhere? We haven't. We've got a narrow spread candle with some decent volume under it. In fact, pretty much the same volume as the previous one. So what is that telling you? That's telling you that there's buying coming in there. There has to be, because otherwise this candle would close the same as this one. It hasn't. It's closed narrow and with a little wick to the bottom. So there must be buying in there. So what are we expecting? We're expecting to see the market rally off that. That's it. Very simple. Up 1 to 10, there we are. And the 10-minute just reflects what we're seeing on what we saw with the 3-minute 2-bar reversal, and we saw on the 5-minute, and the 10 minutes just reflecting that. So we've got some weakness coming in here on the I was going to say slower time frame. It is a slower time frame compared to 15-second. So we're getting to a top. We're getting to a point where we've had a very, very strong run. Getting to a point where there's a lot of people taking profits now. There'll be a lot of people making a ton of money on this, and closing out, taking their profits, selling into the market, and that's the reason you're seeing pause points and reversals. Let's just go and see what's happening elsewhere. And that takes a breather. Let's go and have a look at. Let's just see what's happening on the indices here. Here we are.
Oh, this is about the profile. Can it go on the left of the screen on yours?
The profile, yes. Yeah, you can move the BFOC. You've got me now, but I'm pretty sure you can move the yeah, I think so. Forgive me if I'm wrong. I've got so used to having it on the right-hand side, but I have a feeling that you can move it to the left-hand side. If you have a question like that, please just drop us an email, helpdesk@quantumtrading.com, and the guys there will answer that one for you more quickly than I can. I'm sorry. I just some things I don't use. That's one of them. I always have it on the right-hand side for whatever reason. It's just what you prefer. Yeah. Sorry. Hold on a moment. Yeah. Yeah. I'll just update you on what Anna was saying there. This is the 4 currency indices. I've got the yen top left. This is the dollar top right. The euro bottom left, and I've got the pound here bottom right. So you're seeing some pretty strong late in the day pound buying coming in. We've had dollars selling, which is very much against the contrast of yesterday. So the dollar's selling off quite strongly, which will be helping indices rise as they see the dollar weaken. And this is the yen buying that I mentioned earlier on. This has been very strong since pretty much about 11 o'clock. Now starting to top out a little bit maybe, and maybe roll over late in the day. Just what Anna was saying about think or swim, just going back to that. Let's go back to there we go. That's the indices. Just see where they all are. Yeah, they're all pretty much doing the same thing. We've all got the sort of toppy price action coming in. We've got one there. We've got decent volume, one there. Same again over on the ES. That's it, pretty much the same. The NQs perform probably the best, a little bit outperforming the YM and the ES, but they're all pretty strong and recovering more or less what went down yesterday. What Anna was saying about the think or swim is, and we do have a lot of customers who trade this way. What they will do is they'll have one chart for that, one platform for analysis, and another for actually trading. So despite the fact that we may not have the indicators running on a particular platform, we've certainly got them on MT4, MT5, TradingView, and NinjaTrader, and we'll have them on TradeStation and multi-charts in the next 6 to 8 months, something like that. We work on TradeStation right now. Okay, looks like we're going to have another run. See if we've got enough oomph to get through 8,000 and that sort of area. And it's again, as I mentioned, it's what you kind of expect, because this is a huge number, psychological number. It's not a big number per se, but it's just a psychological number. So whenever you get to 7,000, 7,500, even the hundreds to some extent, but less so. But this is very important. It's a psychological number. And what you're expecting to see is some congestion around there. So from a trading perspective, if you're getting into this rally somewhere up here, then you've got to factor in you've got to account for the fact that we're coming up to a large psychological number, which may well cause the market to pause. For no other reason, it's a big psychological number. It's as simple as that. There'll be orders littered about there because we're lazy as traders. We put orders in on whole numbers, on half numbers. We don't bother with sevens and threes and fours and ones and all that type of stuff. It's too boring. We go zeros and fives generally, and that's what everybody else does as well, I can assure you, because it's easy. Everyone's a little bit lazy. No change on the trend monitor yet. We may well expect to see some if this carries on for another bar or two. Then we may also well start to see a transitional color coming in. You can see the trend line is starting to flatten off. Just head over and see what's happening in the commodities. Silver's rolled over. Silver's quite an interesting chart actually, and it's another where looking at the daily chart just gives you a heads up as to what may or may not happen. I mean, I saw this down here. This looks very lightweight, the volume here. You know, well, you've got several signals here. First of all, you've got this rally here topped off with huge great wicks to the upper body. So it's not looking terribly strong, despite the fact that's a down candle anyway, but nevertheless, the market's tried to rally and fallen back. You've then got a kind of doji candle. Then you've got a 2-bar reversal. So if you put that one on that one, then you've got a weak candle, a candle of weakness, decent volume under it. And then you see this rally here. Well, the rally looks pathetic because you've got such low volume under it, virtually no volume at all. You're also building a ceiling of resistance in this area. So if you put all that together, you know, on the balance of probability, is this going to go higher or is it going to break lower? The balance of probability and analysis of the chart would suggest it's going to go lower. That's putting aside anything to do with what the dollar, how the dollar may impact this particular metal. That's purely from a technical perspective of the chart and nothing else. And from a longer term perspective, we've got a wick to the lower body here, so there may be some buying coming into this market. We'll see at the end of the day what this volume, how this volume associates with it. But then from a longer term perspective, if you're looking at this as a charting opportunity for trading short, then you've got a nice low volume node here. So if the market breaks below $16 an ounce, you've got a really nice run almost all the way back down to this level here before you run into anything serious. You've got volume building down here, so that would certainly come into play. But from a short perspective, you know, this is quite a decent return if you're looking to get into that. And it's how you judge every single chart you look at. Am I going to jump in? What's my opportunity? What's going to cause the market to pause and congest? And am I quite happy with that? The risk I'm putting on the table, you'd have your stop loss up here somewhere. And you know, that's a decision you make. And that's how to make a decision in terms of the opportunity that you're about to take in the market, whether it's worth the risk you're putting on the table or not. Nothing to do with risk and reward. It's all about what the chart is telling you. Oil on the top there. That's on the daily, flip-flopping around on the volume point of control. It's to be expected. This was a very strong level. We highlighted this in several posts we did on oil. It just capped off the rally and sent it lower. Trying to rally, we're trading around the V-pot. We've got more resistance overhead here. We've got a decent level of support underneath. Not going anywhere for the time being, certainly not in terms of trend at any rate. Intraday trading, yeah, but not much in the way of trend, unless anything happens politically. Finally, on gold, this is the daily chart for gold. An awful lot of sideways action. Again, you've got the volume point of control here, so we're oscillating around that. Not going anywhere particular. As I say, we had a breakdown in the relationship between gold and oil, between gold and dollar, forgive me. It does break down from time to time. As I say, all these relationships do come and go, so please don't think that they are absolutely rock solid every day of the week. They're not. I pass back to you? No? Okay. Let me just make sure I've answered all the questions. I think I have. Oh, there's a few more. Hold on. Right. Is that a custom volatility indicator? It certainly is. It's one of the quantum trading indicators. It's $57, and I can tell you it'll be the best $57 you've ever spent. And bear in mind that we do offer a 7-day money-back guarantee, so it's really nothing to lose. And it'll save you a ton of money. Any more questions up there? Can't see. Yep, I think that's it. I think we're done. Okay, that's me done. Oh, sorry, are there any more? Crude oil. Yeah. take a look at crude oil. Yeah, can do. What sort of time frame? I've got crude oil on 1 minute, 3 minute, and 5 minute. Okay. That's on 3 minute. Let's change that up to 5. There we go. Again, you've got the volatility indicator triggered here. So we're trading in that range. We've also got the volume point of control here. So we're trading in that range. So for the time being, not going anywhere in terms of, and it's a question of this particular time frame. You've got to wait. You've got a very, very strong ceiling of resistance in here at 57.82 odd. If this market's going to break to the downside, then the things to look out for are whether you've got any support platforms which are going to come into play, and they look pretty lightweight. You've got a minor one here and a minor one here, so that looks okay. And in terms of the volume histogram, it's falling away quite dramatically down to 56.60, 55 odd. So if you got down to those sorts of regions, then you'd expect the market to break to the downside. Not a huge amount of selling coming in under this at the moment, but just from a cursory perspective, that one is just, you've got to wait and be patient. You've got to wait for the market to break away from one side or the other. I'd say looking at it right now, it looks a bit toppy in terms of the congestion phase that's building. But that can change literally on a 6 months if there's something happens politically or some move by OPEC. So that's what I would be looking at in terms of the 5 minute. I mean, the tone for oil right now is bearish on a longer term perspective, and that's basically what the trend monitor is telling you also, certainly from, where are we? This is 12:30, so 1 o'clock US time, broken away from this region here, tried to rally, strong selling under that candle, into a minor rally, volumes falling away, market's trying to rally, so it's not going far. So this is a secondary within a primary, back into the primary again, more heavy selling under that. Now we're moving back into a rally, volumes falling away, so the rally looks weak, down to the volume point of control, and we're in bearish territory, let's face it. You can see the market breaking down there. And if you were going to jump into that one, and I'm not suggesting you do because we don't give trade recommendations, so please don't follow this. But if I was trading this chart in the normal way, I'd be looking for possibly a break below this level here at 56.55 odd. And then maybe at that point, I might be considering something depending on what's lower down the chart on the slower time frames. I hope that one answers that one for you. Any more? No?
Is your session? Thanks.
You're welcome.
Sergio.
You're welcome, Sergio. Okay, that's me done. Voice is starting to go, so I hope you've enjoyed it today. Enjoy the rest of the trading session.
Oh, it's NFP tomorrow.
It's NFP tomorrow, Deep Joy, usual circus. So we will be back next week on Thursday. And thanks for coming along today. We really do appreciate your spending time with us and hope you've enjoyed it. And we will see you next week on Thursday morning, bright and early at 7:30 London time. So thanks again. Have a good trading day and enjoy the rest of the week and have a great weekend. See you soon and bye for now.